Brady Dougan. We've just spoken to the CEO of Credit Suisse after he announced plans to slash thousands of jobs. Switzerland's second biggest bank is going to axe 2,000 of them to try to save a billion Swiss francs a year. That'll come in handy as the company just missed estimates with profit. Quarterly income dropped by half compared with last year. Let's get more analysis of those Credit Suisse numbers. We can go straight to Switzerland's banking capital. Elliott Gotkine joins us from Zurich. So, Elliott, what's the key takeaway here from your chat with Mr. Dougan?
Well, Lindsay, like you say, from these earnings today, net income half what it was this time last year. That's pretty much the same story that we saw at UBS. There's volatility in the markets, there's concerns about the sovereign debt crisis in Europe, and also the US debt ceiling impasse over the other side of the Atlantic. And that's putting people off from trading, and that's reducing trading revenues. The strong Swiss franc, Brady Dougan confirmed, is not helping Credit Suisse either. And as you say, to boost profitability, they want to cut costs. They're going to slash 2,000 jobs. A quarter of those will be here in Switzerland. Now, interestingly, since the end of 2009, Credit Suisse has taken on more than 3,000 staff. So when I spoke with this Credit Suisse CEO a short while ago, I asked him if he thought maybe he took on too much staff in the aftermath of the financial crisis.
I think our view was that, our hope was that obviously client transaction volume would recover, that we would see eventually an increasing interest rate environment, which is good for our business. And certainly I think that a lot of what's happened, particularly in the second quarter, if you look at the volatility in the market, the challenges that we've seen, those are things that obviously have carried on for longer than we probably would have expected.
So, Elliott, did he have anything to say about
Lindsay,
going forward? About the outlook here? Because this wasn't a great set of numbers.
Without the benefit of a crystal ball, obviously it's impossible to tell exactly where we go from here. Brady Dougan certainly doesn't know, but he's certainly putting a brave face on things despite the prevailing uncertainty.
I think things continue to be challenging. You can just see the sort of macro global political events, continue to, clearly continue to, I think, have an impact on the markets and on things around the world. So I think it's hard to say. What we needed to do is make sure that we get our business in a position where even if that does continue, we can continue to make best-in-class returns, and that's why we've taken some of the action that we've taken in terms of increasing the efficiency, cutting the cost base within the business.
Brady Dougan also today announcing a new head of the wealth management arm. Now, that unit is embroiled in an investigation by the Department of Justice in the United States, the allegation being that Credit Suisse helped US clients evade US taxes. Now, Brady Dougan would not be drawn when I asked him on whether they would reach a settlement with the United States government, as UBS did back in 2009, paying an $800 million fine. But he says that they will be working as hard as they can to find a speedy resolution to this investigation, Lindsay.
It wasn't speedy with UBS. Thanks, Elliott.